And we are live and recording.
Good afternoon and welcome to the Audit Committee meeting of the State Bar. As a reminder, this meeting is being recorded. Please call the roll.
Broughton.
Here.
Chen. Dellen.
Here.
Seleg.
Here.
Shelby.
Present.
Tony. We have a quorum.
Thank you. Next on the agenda is a call for public comment. State Bar staff, I'm sorry, Justin, will attempt to call members of the public in the order that they appear in the attendee pool. For those of you who are participating by Zoom video, you should have a function for virtually raising your hand. It is a hand icon and should appear at the bottom center of your screen. If you wish to address the committee, please click on the hand icon now, and State Bar staff will call on you in the order that hands are raised. For those who are participating by phone, you may virtually raise your hand by pressing *9. That is the star key, the number 9. Again, doing so will alert staff that you would like to make a comment, and State Bar staff will call on you and open your microphone so that you can address the committee. Due to time restrictions, we cannot allow more than 3 minutes for each speaker. Justin, can you identify any members of the public that wish to speak?
I do not see any hands raised.
Excellent. Going once, going twice. Perfect.
One here also in the office.
Oh, thank you, Sonia. Chair's report. We have not had an audit committee meeting, I think since January, I believe. And so there is nothing to report. Certainly, I'm looking forward to today's discussion. And at that, I will ask if there are any members of this committee that wish to pull an item off of the consent calendar. If committee members do not wish to pull items off the consent calendar, I will call the first item as and the only item on the consent calendar listed as follows. Approval, would anyone like to pull from the consent calendar? I'm sorry, I'm moving rapidly. Excellent. That being said, consent calendar item A, approval of Q1 2022 Board and Management Travel Expense Report, May 54-181. Is there, I'd like to call the item for consent of approval of the management travel expense report. Is there a motion?
I move.
Is there a second? Is there a second?
Did Sean second? I thought I heard. I'm not sure. If not, I'll second.
Okay, thank you. That was a motion by Dellen and a second by Broughton. Can you call the roll, please, Justin?
Broughton.
Yes.
Chen. Dellen.
Yes.
Seleg. Sean, I didn't hear you.
Yes.
Okay. Tony, it passes.
Excellent. Item number 3, business item A, annual financial statement audit pursuant to Business and Professions Code 6145A, including legal services trust fund report under Business and Professions Code section 6222. First, we will have a presentation by independent auditors, Macias, Gini, and O'Connell. Then we will have a review of financial statements, and then we will have authorization for submission by staff to the state legislature and Supreme Court. And at this point in time, I'm going to pass it over to our CFO, Araceli Montoya-Chico.
Thank you, Melanie. Good afternoon, late afternoon, everyone. So I'm going to share my screen and start the presentation. So let me know when you see it.
We can see it.
Good. Okay. So today, this is a presentation overview. I'll start off by covering the audit reports, or the reports that are covered in this 2021 fiscal year in audit, and a little bit of background. I will present some preliminary financial results and audit discussions, and I will then pass it over to our MGO, Macias, Gini, and O'Connell audit partner, David Bullock, who's joined us here in the meeting. So first off, the background. So the Audit Committee does have responsibility based on the board manual to oversee our financial statement audit, or external financial statement audit. Our recurring external auditors is MGO. They have been engaged since 2018, and this is their 4th year of audit. So they've become very familiarized with our organization. We do have a deadline, statutory submission deadline to submit these reports by April 30th of every year. The reports are prepared by our Office of Finance, and MGO will certify them. And our reporting period for this audit is our fiscal year, which covers January to December 31st of 2021. So included in the audited financial reports, it's 4 components. The first one being our annual audited financial statements, which covers our all of our operating revenues and expenses, results, and our assets and liabilities. The second report is the Legal Services Trust Fund Program Report. This is in accordance with the provisions of the Business and Professions Code 6210 through 6228. And what this report mainly covers is the distribution or the compliance of distribution of IOTA funds to qualify legal services projects and legal support centers. So that is a type of compliance audit, if you will. Similarly, for the statement of expenditure of mandatory fees, it's also mandated by the Keller standard, and it is a type of compliance audit as well. And this standard basically says that we cannot use mandatory fees paid by licensees for political or ideological activities. That are not, political or ideological activities not related to the regulation of the legal profession. So first off, I'll share this slide, which is our balance sheet, high-level overview of a year-over-year comparison. What I am highlighting here really is the biggest categories or the biggest financial statement captions. That is not meant to be an all-inclusive list. Those details are in the detailed agenda item attachments provided to you. So you'll see that for assets, our biggest categories are cash and investments and capital assets. Cash obviously has been increasing from prior year, and that's just mainly due to the loans that we've obtained in current year and maturing of investments that have happened throughout 2021. On the liability side, you'll see that these are the 3 biggest categories. And having the most significant change. Our unearned fees are really mostly related to how we account for the grants that we've received, which have increased in 2021 compared to 2020. And the loan payable, as I mentioned, cash increased, but at the same time, our liability also increases. We did take out that new loan in August of 2021. The next item here, the net pension liability, that, as you can see, decreased significantly. Now, the net pension liability is impacted by an annual actuary valuation that occurs. So any accounts on our balance sheet and income statement that you'll see in the next slide, those are all pension and OPEB, or other post-employment benefit related accounts. Those are all really determined based on an annual actuarial valuation that we do receive from our independent actuaries. And those valuations are based on a defined measurement period that covers 12 months. So that, along with the actual results of the pension trust or of the OPEB plan, those changes do get reflected on the balance sheet and the income statement once the results are provided to us. Those valuations are based on various assumptions that are applied to those pension and OPEB plan participant census data. And then when we get the results from the actuaries, the year-over-year changes, we record them typically in Q4 of each year. So that's when you will see a significant change potentially in these accounts.
Araceli, when you bring that point to an end, I just wanted to acknowledge that Mr. Tony has joined us, and I believe his hand is raised, so he may have a question. Thank you.
Okay. Yes, please do let me know if there is any questions as I go through these. So, I will say the pension accounts and the based on the actuarial evaluation that we did get, it did significantly decrease. In this case, pension liability was mostly impacted by the investment income earned in the pension plan. Now, as I mentioned, the actual plan results also impact these type of accounts. And due to the actual plan earnings, our funded status of the plan actually increased. So yes, our liability decreased, and in turn, our funded status improved from 82% last year to 95% in 2021.
Okay, excellent. I'm gonna pause for a moment. Araceli, Trustee Tony, I believe, has a question.
Thank you. My question is on the net pension liability. So I understand that we have a defined benefit pension. Is that correct, Araceli? Yes. Okay.
Correct.
And so when I look at these numbers, does that mean this is how much money we're short on funding the obligations? Does it mean this is how much money we're in excess of? So my first question is, when I look at the number, what does it mean to me?
Okay, so, and I will ask David, or MGO auditor, to chime in here, because he can explain this, I think, in a lot simpler terms, since he's been doing this for 10 plus years, where he can explain this. But our net pension liability is the change of the state bar's liability in the pension plan. So it is what we I guess what we owe to be able to fund the plan. David, and please feel free to chime in and see if maybe there's something else I'm not capturing here entirely.
Yeah, I'll just start by saying the net pension liability is, as it sounds, it's a net, and there's two components to it. There's the total pension liability that the actuary projects. So the actuary goes through the time and effort to model out what the future benefit payments will be over the life of the plan. And then they discount that to a present value, meaning that's the value that liability is today, because those investments that are in the plan are going to earn money, and there's going to be future contributions. So that's the net, that's the total liability that the actuary says is as of a specific day and time. And that measurement date is June 30th. And so we're actually reporting these numbers as of CalPERS measurement date, so June 30th. And then the other component of that is the money that's set aside in the trust. So the money that State Bar has in its trust fund to pay those future benefits. And so those two components comprise that net liability. The liability went up a little bit, around 15 million, which is expected. As time passes, the liability is going to increase as employees earn pension. But what really increased was the trust plan assets. The money held in the plan increased 77 million, much more than would be expected based on the portfolio size. And so that big gain reduced the net liability from last year to this year by that amount. And it's an accounting entry is you're funding it in a different way. State Bar makes contributions based on payroll every year and also pays a portion of the unfunded liability. That's the funding mechanism. Yeah. This is completely different. We're not smoothing things out the way the actuary does. We're presenting the numbers as of a specific date and time. And these numbers, even though we're December 31, they have to be measured, and that measurement is June 30th.
That's extremely useful. I actually appreciate that level of detail. So let me ask a question. So when I look at these numbers based on your explanation, in 2021, we have the State Bar has less net pension liability than it did in 2020, and that's a good thing.
Yes.
It's an improvement. So even though the variance is listed as a negative number and the percentage of variance is listed at -73, this is actually a positive, and I'm not disputing how you do that, but I just want to make sure that it's my understanding that these are good numbers. This represents an improvement in the state bar's ability and, quite frankly, responsibility, fiduciary responsibility to make sure that the pension liability is fully funded. Am I close here, David?
Yeah, you're very close. The reason it's negative is because it's a reduction of a liability.
Got it. Got it.
And then
It's
I
actually a
would just-
positive thing.
And
Yeah.
I would just add that, I don't know, obviously the plan improved because your trust improved. I don't know what CalPERS is going to do going forward. I think they're doing some conservative things like reducing the expected investment earnings. Whether or not it has a big impact to future contributions, I don't know. But overall, the plan improved significantly.
Thank you
And
very much.
I would just say, I think, Mark, you may be giving us a little bit too much credit. And I think David was alluding to this. The change in the net position is not because of something different the state bar did. This is based on the assumptions that CalPERS makes and their own very complicated formulas. So it could have another big wild swing next year. What we're responsible for is we have to make our minimum annually required contribution. We have to make our payments, and we are doing that. And for a long time, we had a very low percentage of our unfunded liability. And I don't know what it is now, David. I don't know if you have that. That's one metric that we've looked at over time, is what percentage of that liability is considered unfunded. Some cities, the state, have these huge percentages of unfunded liability. We didn't for a long time. I don't quite recall what it is this year.
Thank you. Thank you.
I see trustee. First of all, David, I want to say welcome to the meeting. I didn't get an opportunity to do that. It's great to have you with us. I see that trustee DeLynn has a question. I see her hand raised.
Thank you. Thank you so much. Just a question on the unearned fees, and I know this is timing. So when with the unearned fees, so is that carried over to 2022 when you get those fees?
Correct. So this is basically unearned revenue, right? And most of this is attributable to the grants that we received, because the grants are multi-year grants. Some of them, go out till 2024, if I remember correctly. So as the months go by, as the years go by, we are going to be recognizing those revenues, those fees into the respective year that they belong to. So some will go to 22, some will go to 23. Some will go to 24, depending on when the loan, not the loans, excuse me, the grants, when the grants end.
Are any of those grants, do they sunset or they just go?
No, they do. Yeah. So these are mostly due to the the Equal Access Trust, Equal Access Fund grant and the Homeless Prevention 2 grant. I think the Equal Access Fund grant ends in 2023, and the Homeless Prevention 2 grant ends in 2024, if I remember correctly.
If the equal access funding is consistent, it may have gotten a one-time bump, but that is an ongoing set of funding. The homeless grants, as Araceli said, are all limited term, I think multi-year, but limited term.
Yeah, that's right.
When they do we do anything to renew that when they sunset, or when it goes away, then do we have that? How would that impact our budget?
Well, we allocate the vast majority of that funding. I can't remember what the percentages we retain for administrative costs. I think generally it's about 5% of any of the money that we receive for legal services. So this is all the money, Sonia, we're using to fund legal services organizations in the state. So when the homeless grants expire, we won't have that money to allocate. it doesn't necessarily impact our budget in other ways. We haven't, for example, added a number of new long-term positions that then we wouldn't be able to cover once we lose the grant.
But they are project-based.
The project and most of this money is allocated out.
Okay, thank you.
Trustee Tony, I see your hand is raised.
Thank you, Trustee Shelby. I wanted to follow up the question that Trustee Dillon had on the unearned fees, and I appreciated the explanation that was given. I'd really like us to consider changing the labeling on this to grants, because it sounds like it's grants. The issue I have with unearned fees are the first word is unearned. And it seems like that calling it unearned seems like we don't deserve it. That's what unearned means. And fees sounds like we're charging the attorneys for it, because we charge fees. And I don't think this is money coming out of licensees' pockets. And I think it's more accurate from the discussion to just call it grants. The other things seem to be labeled what they are. And I'd like to see this labeled what it is.
Okay, yeah, we can certainly do that. You know, from a US GAAP perspective, unearned revenues is a common word. So maybe we can replace it with unearned grant revenues. They are unearned because we receive the money upfront fully, but we haven't yet earned, you know, the revenue in the respective year, given their multi-years. But
I think that's a fine compromise. I'm fine with it. It's just the fee makes it sound, for someone who doesn't know and knows what the state bar does, that we're charging attorneys for this, and I don't think we are.
okay, yeah, sure. We can certainly rename fees to some unearned revenues, unearned grant revenues, something along those lines. Any other questions? Any other questions for now? No? Okay, so I'll move on really quickly to the income statement. Here you can see, you know, high level or operating revenues and expenses. Again, similar to the balance sheet, I am presenting here a very condensed version and only presenting those revenues and expenses that have fluctuated significantly. Here you'll see again, you know, that grant revenue. The grant revenue has increased similarly to how our grant expenses also increased. And those are all grant related. Trust account revenues are decreasing, and those are mainly due to the continued falling interest rates. Here you'll see something interesting, the unallocated pension gain, an expense that is impacted by the conversation we just had on the actuarial evaluations for the pension plan. So I did want to highlight that, since it is a unique change. It was an expense last year. That's why you see the negative 3.3 million there. And it swung to a gain of 15 million. So that was a pretty significant change there. If there's no questions on this, I will pass it over to, I think I see Mark.
Sorry, I got a question. What it seems to me is that in your variance column, it looks like there appears to be a calculation error, and I'll give you an example why. So if you go from a negative operating income of 58 to a positive operating income, it doesn't make sense that the variance, it makes it look like you've lost money, that you're doing worse, the minuses, when in fact you're doing better. So I don't know what to do about it, but I just wanted to point out that to me, it doesn't correspond with an increase, you know, like in operating revenues, your very top line, where you go from 183 to 201, and you have a plus 9% variance. That's easy for the mind to understand. We had an increase from the previous year of 9%. License fees, you know, it's a little bit less. But when you get to the negative numbers, the formulas don't seem to be really reflecting what is an improved situation, rather than what appears to be a negative situation. So I don't know what to do about it. I just wanted to point it out.
Sure. So I think maybe what the labeling, so in 2020, and I know I put their operating income for the current year, but actually for 2020, we had an operating loss. That's why you see the negative 58. So maybe it would be a little bit more clear if I had put income and then / loss, which was that 58 million from last year. It was a loss versus an income.
Right. But to me, the difference between a loss and a increase, a loss and a positive gain shouldn't be a negative. It should be a positive somehow. I'm just saying conceptually, I don't know how to fix it, but I'm just letting you know that it's kind of it kind of is counterintuitive that you would represent a gain as a loss in the variance.
I don't think, which number do you think is a gain? Maybe I'm.
Operating income in 2020 was a negative 58 million. In 2021, operating income is a positive 11 million. But it says that the variance is 69 million, and the variance is a minus 119%. And I'm just saying that it makes it look like we're doing worse this year than last year, when we're clearly doing better in it. That's what it looks like to me. I don't know. Maybe I'm misreading.
Yeah, I see it now. I think the 69 million makes sense, but that negative 119, I'm not sure. I don't know, Araceli.
I think it's the mechanics of the calculation, because your variance is your variance divided by your prior year number. Because our prior year number is a negative 58 million, it yielded the negative 119%. But I understand what you're saying now, Mark. It really, yes, that is the mechanics of the calculation, considering we are divided by a negative number, but it really is, it should be, I guess, 119 positive change.
Okay,
because our variance was positive.
Okay, maybe what happened in this, maybe some numbers got transposed, because you're not really saying that in the year 2020, you did not truly have an operating income of minus 58 million. You had an operating income that had to be I don't know, it
was an operating loss.
It's a difference between the revenues and the expenses. The expenses far exceeded the revenue. And that's because of the year the grant monies received versus when we spend it.
I got it. Okay.
Yeah.
Okay. All right. I'm fine. Thank you.
Okay. So with that, I will pass it over to David Bullock, our MGO partner, to start his presentation.
Hey, good afternoon, everybody. So this slide probably looks familiar to you, and I just wanted to remind everybody that we're still wrapping up the audit, and the timing is such, and this is a very tight deadline for State Bar. 4 months after the year end, depending on the types of organizations, is a challenge. Most governments, have 6 months to issue their financial statements. The size, government's the size of State Bar. So having everything done in 4 months is a challenge, giving staff time to close the books and get through the audit. So what we have here is preliminary financial statements that we're looking at. So we're almost done. We plan to be done in the next day or so. So we're really close. I'm just going to assume that everything's going as expected, and then we're going to issue the next day what we know as of today. So this slide probably looks familiar to you. We met back in January where we did a planning meeting, and we presented the planning matters and the planning communications to you. And so just to reiterate, our responsibility is that first section is to issue an audit opinion. And that audit opinion is basically looking at the financial statements prepared by management and expressing an opinion as to whether or not they're fairly presented in accordance with generally accepted accounting principles. And that's the measurement that's used when preparing the financial statements. We follow the AICPA standards. So there's standards for audits, generally accepted auditing standards that all audits conducted by CPAs are performed under. And so there's established standards that we follow as we do the audit. We look at internal controls for the purposes of designing our audit. We don't look at internal controls to express an opinion on whether or not they're operating effectively. So that's just a clarification that we want to make sure you understand. If we see areas of internal control where there's deficiencies, where there might be issues, whether it's they're not properly designed or they're not being operated effectively, then we'll bring those to your attention through what we call a management letter. And then finally, the findings, and that's one of the reports that we've issued to the board, to you, as a summary of the results of the audit. Obviously you get the financial statements, you see our opinion, but you don't know what's behind the opinion. You don't know what kind of details were done as part of the audit. So this is our opportunity to summarize the results of our audit to you, decisions that were made, any challenges or difficulties. So those are that's the process. And as far as the audit opinion goes, we've issued 3 separate opinions for the 3 different reports, and we've issued 1 report to the board. Next slide, please. And so I think Araceli already summarized the deliverables. We've got the financial statements, the basic financial statements. We've got the mandatory fees, and then we've got the legal services trust fund. So those are the 3 reports that we issued, and then the report to those charged with governance. And that's our responsibility as your auditors, to make sure we communicate the results of the audit to you. Next slide. As far as the audit timing goes, we did begin our planning back in the fall of 2021. And most of that revolves around understanding what happened during the year and just gathering preliminary information. At that time, we don't have any numbers to look at. The financial statements are still in process. And so we use that time to plan the audit and design the audit procedures. And then in March, we started the audit, giving staff time to close the books and prepare the financial statements. So we began the audit in March, and then that continued. And the final fill work, doesn't necessarily get done in 3 to 4 weeks. Sometimes there's follow-up on items and so forth. But in March and April is the reporting and presentation. And so that's where we're at today. We're very close to finalizing the audit. We're just wrapping up a few of the open items that need to be concluded before we can issue our opinion. And as I said earlier, we expect to issue, I think, in the next either tomorrow or maybe Friday morning, but hopefully tomorrow. Next slide, please. So what we communicated in the planning meeting back in January, you can see there that we had a meeting back on January 20th. We communicated the planning matters, both our responsibilities and the scope and timing of the audit. The results of the audit, these bulleted items are the key areas that we disclosed to you in our report to the board. We disclose kind of the qualitative aspects of any accounting practices, especially if there's been any changes in consistency, if there's something new. We'll talk a little bit more about some of the GASB pronouncements that'll affect State Bar. We also disclosed to you whether or not there's any difficulties in the audit, whether or not there was any misstatements. Sometimes, we say these financial statements are fairly stated. We don't say they're perfect. And so oftentimes there might be small differences that don't necessarily get corrected by December 31. They may just get corrected in the current year. In 2022, especially if they're immaterial or small items. And so we summarize anything that should be brought to your attention if there are any. Disagreements with management, I'm happy to report there's none. Management makes representations to us in terms of, presenting the information and having all of the information available and disclosing all of the relevant matters on the audit. So we ask management to sign a representation letter. And then we also alert you to any consultations on any specific accounting matters that we're aware of. And we're not aware of any that were done during 2021. And then just any other audit findings or issues. And so those are the things that are communicated in the report to the board. Next slide, please. And so I'm happy to report that the preliminary results, the results we expect to issue are unmodified opinions, and that's the highest level of assurance we can provide as auditors. Basically, is unmodified, meaning that we agree with how the financial statements are presented by management, and that they're presented in accordance with generally accepted accounting principles. And so that would be an unmodified opinion on the financial statements and on the mandatory fee report and the legal services trust report. Next slide, please. As I mentioned earlier, we want to bring to your attention any changes in consistency. When sometimes State Bar may change an accounting policy. Sometimes there may be external impacts to State Bar, and there has to be changes in accounting. And then there might be new accounting pronouncements. GASB is responsible for establishing generally accepted accounting principles, and they issue standards frequently. So there, as you can see, there were 3 new standards that were applicable this year. None of them impacted State Bar, and therefore there was no real significant changes to the financial statements. Next year, however, will be a different story. Leases is a significant pronouncement that affects all governments, and whether or not you're using leases in your operations, using equipment or building space or vehicles, or whether or not you own property and you're leasing it to third parties. They have to be accounted for very differently than they have in the past. And so that could be a material change in how the financial statements are presented next year. It'll be something that, we'll have to work with management as they implement these new standards. If State Bar is successful in selling the San Francisco property, that might have a significant impact in terms of not having leases to report under these standards. So some things to contemplate, but that'll be the most significant pronouncement affecting State Bar. And then there's a few others there that may have some level of impact, such as subscription-based IT arrangements. Those can be significant under today's standards in terms of use of technology. And then next slide, please. And then finally, on the reporting of internal controls, we didn't report any material weaknesses. We do have one significant deficiency in terms of preparing the financial statements that will probably continue from last year. Just in terms of, I think State Bar experienced some turnover in the finance department, which has impacted, I think, some of the timing of closing of the books. And so I think we're finalizing that comment and be looking for management to have a response before we finalize that report. So that should be done in the next couple of days. And so that'll be something that will be one of the key areas that we'll be wrapping up probably by tomorrow. And then I think, is there one more slide, or is that it? That's it. So I'm happy to answer any questions you might have on the audit.
I see Trustee Tony has his hand up. You're on mute.
Thank you. David, could you say more? Because it wasn't reflected in the report. It says you're still working on it. Could you say more about this deficiency? Because there's no information for us about that, please.
Sure.
It was blank on page 101, so that's why I'm asking.
Okay, and I think it's probably blank because management probably wants time to consider what our comment is. And
okay, that's okay. Give us the gist.
The gist is just having when the audit starts in March, we're given a trial balance, and that's our beginning point of how we, begin our audit process. And then we go through and develop a list of items that we want copies of. We want to verify the cash is in the bank. We want to verify that the investments are being held. We want to look at, assets is a key area. We want to look at the receivables and make sure they're valid, that they're being reported properly. And same thing with capital assets. There wasn't really a lot of change in capital assets. I mean, you're doing some improvements, so there was a little bit of building improvement, but we want to verify those additions. On the liabilities, we want to make sure that all the liabilities are reported. We do a search for unrecorded liabilities, meaning we look at payments after year end to see if any of those should have been captured and reported last year as a liability. We look at the loan. We want to verify that the outstanding loan balances are accurate. We want to also look at the significant OPEB and pension liabilities on the books. And so we want to look at the actuary. There's a lot of procedures we do to verify the actuarial estimate, because it's an estimate, it's a soft, what we consider a soft number versus a hard number, which might be a payable. So we go through that whole process. And so when we see areas that still need to be reconciled, or we see areas where there may be issue, we want to bring those to management's attention, and things that can be improved during the closing process to avoid having adjustments or avoid having follow-up and things after the books are closed. And so, and so when we have extra time needed to audit the books after they're closed, that's when we look to identify those areas and just make management aware.
That's very useful. So on page 100, it says finding 2021-001 significant deficiency. And then underneath it, it says improve internal controls over financial reporting. Well, that's a remedy. That's not a description of a deficiency. So can you give us an idea of what it means, what the significant deficiency is here?
Yeah, I think we cited 3 areas of deficiencies. One was in the recording of accounts receivable, one relating to capital assets, and one relating to the calculation of net position as it related to the investment in capital assets. So there's 3 areas that we identified that can be improved for next year.
Perfect. Thank you, David. That's all I was looking for. It's not written here, so that's why I appreciate you giving a verbal report. Thank you.
And my understanding, Mr. Tony, is that the version of materials that we have was the first draft of the version because of the very tight timeline, and that there are other iterations. So that was a great question. I had a question for you, David. If there were just 2 to 3 takeaways that we should take away in terms of this, in terms of your audit, what would it be?
From your responsibility as the audit committee?
I would, yes, because as a public member, I'm not an attorney, I don't pay fees. And so if we were sharing with the general public the 2 to 3 takeaways as it relates to this audit, what would it be?
Well, I think number 1 is that you have in front of you financial statements for fiscal year, when I say fiscal year, calendar year 2021, that management has prepared and that we have basically opined on, that they're fairly stated. So I think you have financial statements that have an independent, unbiased audit, so that they're trustworthy. The transparency, when you think of financial statements, that transparency is improved when you have a third party verify those. So I think that number 1 is that. Number 2 is that there's no material compliance findings. There's no material weaknesses. There's nothing there that's alarming in terms of matters that we identified during the audit that we're bringing to your attention. So I think that's pretty significant. This State Bar is not a for-profit business trying to go out there and improve earnings and sales and all those kinds of things. It's more about managing resources and more about having various programs. The financial statements are presented in a way that really focuses on all the different programs that State Bar manages, and trying to allocate the costs and allocate the financial statements in that manner. And so I think the third takeaway is that just for accountability purposes, the information is very transparent in terms of how those different programs are operating, and where the money's, which ones the money's going into, the sources, and then how those sources are being spent. So, in terms of what I would focus on, there's a lot of things happening. There's pension changes, there's investment changes, there's grants coming in. So there's always going to be things that are unique to each calendar year. But in general, I think the having the information available by fund as in those supplementary sections gives you a lot of information about individual programs, and therefore whatever your objective is or what your interest is, you should be able to identify that information.
Thank you for laying that out. I'm just going to restate that, because I think oftentimes we don't necessarily get the opportunity to relish in the good things that are being done. And so I think the fact, I appreciate the takeaways and how you articulated it in terms of our financial statements are trustworthy and transparent. There is no material compliance finding, so there is nothing alarming as it relates to what's going on with the State Bar. And then last but certainly not least, as it relates to accountability in the managing of resources, money is going to programs to do, money's going where it's supposed to go. And so I appreciate that. I see Trustee Deline has her hand up.
Thank you, and really appreciate that we do have a satisfactory financial statement and opinion. With respect to timing, which is, this is a forever problem. What can we do about it? I mean, in my line of work, of course, we require 120 days after, FYE. And that's all the filing and everything. Do you need to start sooner? Do we need to add more people? Or is our system, is there a way that we can make the system more efficient so that we don't always have to be rushing and the day before, that we just have to approve everything and get it sent out? Mm-hmm.
And before you chime in, David, I would like to say that was going to be my next follow-up, and I was actually going to ask Leah to chime in on that, because I know statutorily it's April the 30th, but David, you made a very interesting point about governments that are the size, whose operating budgets are the size of the State Bar, how they have 6 months. And so I don't know if from a historical standpoint, there was ever a time that the State Bar went back to the legislature to see if there was an opportunity to change that date. And I was just curious on the history of that. So thank you.
No, I don't recall. And I was thinking about that as well. I don't recall. And I think that that's probably been an oversight. I'm thinking of this conversation I've had the years that I've been here. And it's never come up as, would we pursue a statutory change for the submission date? And I don't see any reason why we wouldn't, particularly armed with that comment and that information that David provided, that what we're being asked to do is not typical. So no, so I make a note of it. We are going to have I think, a legislative discussion later this week, and this is a good item to bring to that group.
Okay, thank you. And David, I think you had some following up comments that I chimed in. I'm sorry.
Yeah, I would just say this. I mean, obviously, this is a decision for State Bar, not for the auditors. We're the auditors, and we could audit to whatever State Bar needed. I mean, there's banks that issue within 30 days, so it could be done. But what would have to be done in order to meet that would be an evaluation of the closing procedures needed to be done, and the resources that State Bar would need to have in place to get that done in that amount of time. So, I can't really comment to that, other than, it could be done sooner. It's just a matter of the technology being used and how that can be effectively managed, and the resources, and whether or not the finance department has enough resources to do all the things they need to do to close the books in such a short period of time. But my comment earlier was just more to just the traditional governmental process is
Mhm.
typically 60 days and 6 months. And oftentimes, if you use the state of California as a measurement, they look to special districts and others, typically giving them 6 months. So having it required in 4 is unique to state bar. I'm not sure how that precedent was set, but it's, state bars are a large organization, and 4 months is pretty tight. It's typically the closing process for governments go.
Thank you.
And
Any other- I'm sorry.
I will also say, Melanie, we are working to fix and improve our financial reporting system, Oracle. I think you guys have consistently heard that we've struggled with that. There's a lot of implementation issues that we are still, working to fix, and we can't stop. So data keeps being fed into the system because we have no choice. Yet we still have, things that still need fixing. So that's a challenge there. And like you also said, resources, right? We have had turnover in resources. I think you guys are all aware. So that's also being a challenge. And just a lot of competing priorities that really happened the first couple of months of the fiscal year with the budget due in February. That takes away resources for that project. So just some things that contribute to
Sounds like you've outlined the business case.
that. Hopefully.
Any
We'll see.
other questions? Trustee Saleh, Trustee Broughton? Excellent. Well, with that, I'm sorry, someone was going to say something. With that, I'm sorry, Sean, please.
I just said nothing from me.
Nothing from you. Okay, perfect. Well, with that, how's that? Well, with that, I am going to ask for a motion. And do I need to read the resolution?
I can share.
You can share it.
Yeah, I will share the resolution
Please do.
on the screen. People can see it.
Perfect. Resolved that the Audit Committee receives, reviews, and authorized staff to file the State Bar's audited financial statements and related auditors' reports for the year ended December 31st, 2021, with the Board of Trustees, the State Legislature, and the Supreme Court by April 30th, 2022. Is there a motion?
So moved.
Trustee Toney, and second?
I second Dylan.
Trustee Dellen. Perfect. Can you call the roll, please?
Broughton,
Yes.
Chen, Dellen,
Yes.
Saleg,
Yes.
Tony,
Aye.
the motion passes.
Excellent. The next item on our agenda is closed session, and there is no closed session. So with that, do we need a motion to adjourn, or can we just say goodbye?
I moved to adjourn. Let's go.
Perfect. Thank you all so very much, Arceli, David. Thank you very much, Justin.
Yes, thank you. You're welcome. Bye.
Thanks.
Goodbye.